Hello everyone, welcome back to my channel. So if you are new here, don't forget to subscribe and please do watch my previous videos also. I made videos on swing trades where which I took in the past days where I made around 10 to 15% in just 10 to 15 days. So in this video, I am going to talk about one of the important topic in investing or trading, that is position sizing, a key component of risk management. Nowadays, a lot of people are entering into stock market without learning risk management. This is the basic entry criteria for entering into stock market. So I request everyone to know about risk management before starting investing or entering into any trade. So in this video, I'm going to talk about three main important topics. What is position sizing, why we have to consider position sizing, and how to calculate the position sizing. So in this video I am going to talk about um, these factors, so please watch till the end. So what is position sizing and why we have to consider the position sizing? So basically position sizing is the process of deciding how much capital we have to allocate to a single trade based on our position sizing or account size or quantities, and the based on our risk appetite and our strategy rules. So by doing this position sizing, we will get to know how many quantities of shares we need to buy based on our risk, and what is the total capital we are deploying for that particular trade based on our risk, right? So second thing is why we have to consider it, why we have to consider the position sizing. We have to consider the position sizing in order to control the risk, in order to maintain the consistency, in order to cut the losing streaks, and in order to maximize the growth safely. And fifth and foremost important is, that is not mentioned, I didn't mention here, the fifth one is to diversify the capital, right? To diversify the capital, in order to control these factors, you need to consider doing position sizing. So how to calculate the third thing, how to calculate the position sizing? So before going to calculate the position sizing, we need to follow one rule, that is we should not risk more than 1% of our capital for that particular trade. That means suppose if you are having 1 lakh capital, you should not lose we should not lose more than 1000 in that particular trade. Even if the stock goes in loss, we should not lose more than 1000 rupees, that is 1% of that 1 lakh. So how to calculate the position sizing? In order to calculate the position sizing, we have the capital x and we have the total risk 1% of x. 1% is the maximum. Here I'm considering it as a maximum risk I'm taking on that, on the total capital of x. So basically we can go 0.5% or 0.25% or 0.75% or 1%, so not more than 1%. So we should always keep our risk under 1%, right? So then we have the entry price and then we have the stop loss. So based on these four factors, we are going to calculate the position size or the quantities. So in order to calculate the quantity, we have the total risk, entry price and stop loss. So total risk is the 1% of our capital. So the quantity or the position sizing is depend on this formula. Please note this formula, please use this formula before entering into any trade or before entering into any swing trades or any long term or mid term, right? So the formula tells, if we are dividing the total risk divided by the entry price and the stop loss, we will get the total number of quantities, right? That is what the position sizing is. So by doing this position sizing, we will get to know the number of quantities of shares we need to buy and the total capital required for that particular trade, right? Clear? So we will go through one example. In order to understand more deeply, we will go through one example of this one. So suppose if your capital is 1 lakh, total capital is 1 lakh. Suppose you are having 1 lakh capital, so the risk is 1%. The risk is 1%. of our total capital, that will come around 1000 rupees, right? 1000 rupees. So this is our risk, maximum risk I'm considering as maximum. So and then we are trying to enter into stock XYZ, which is having current market price of around 500 rupees, right? This is our entry price. And stop loss, we will say we have set around for 450 rupees. 450 rupees means around 50 point stop loss we have kept. So in order to calculate the position sizing or the quantity, so we have the risk is 1000. So based on our formula, as per our formula, 1000 divided by what is our entry price. Entry price is 500 minus what is our stop loss. Stop loss is our 450 rupees. So we will get 1000 divided by 50, right? 50 point stop loss is there. So we will get around 20. What it defines? This defines the total number of quantities, total number of shares, the quantity of shares we have to buy based on our risk, right? So in order to know what is the maximum loss we are going to incur, right? So number of quantities is 20 and our stop loss point is 50, right? So if you are multiplying the total quantity and the stop loss point, maximum we are losing 1000 rupees. This is what we defined our risk earlier as 1%, right? So even if the stock goes in negative, if even if the stock goes in loss, we are not losing more than 1000 rupees, right? We are cutting the loss at early stage itself. At 1000 rupees itself we are cutting the loss. So this is the maximum risk we are taking in that particular trade. And in order to know how much capital we require, that is the 20 quantity, and the entry price is around 500, right? 500, how much it will come? It will come around 10,000. 10,000, it will come around 10,000. So basically we are using capital of 1 lakh, but for this particular trade we are using capital of just only 10,000. How? Based on our risk appetite. Based on our risk appetite means based on our risk, 1000 risk, we are getting only 20 quantities of shares we have to buy. So based on that we are investing only 10,000. So what about the remaining 90,000? We still having 90,000 left in our wallet, right? 90,000 left in our wallet. That is where that fifth point, why we have to consider the position sizing. That fifth point, diversifying the capital. That is where the topic comes, diversifying the capital, right? See, this 90,000 we can invest in some other trades, right? We can use this 90,000 for in order to trade other trades. So with this 1 lakh, suppose if we are buying around around 5 shares, 5 trades, if we are buying around 5 trades, even if the two are in loss, even if the two are in loss and three are in profit, we are still in profit. You are still in profit, right? This is clear, right? So this is what about position sizing, and this is how we have to calculate the position and position sizing, and how we have to define our total capital. So guys, if you really like this video, if you really found this video helpful, please don't forget to like, share and subscribe. Okay, thank you.